Hey everybody, I'm Zach.
And I'm Jesse.
And you're watching In Depth
on Now You Know.
Sponsored this week by A Better Route Planner. Over 8 million routes planned. Can you believe that, Jesse?
Wasn't it like 7 million like a week ago?
Yeah, I know, right? It's crazy.
That is crazy.
And brought to you by Bior.
Or build your own robot kit. Take robotics to the kids level.
And brought to you by ecoware.us, where we upload new designs every week.
So buy a cool graphic tee completely guilt-free because we offset the carbon emissions from the manufacturing, the shipping, and the life cycle of the shirt. And then on top of that, we plant a tree for every order. So it's carbon negative. So Tesla just announced that they are offering their own auto insurance starting in California. And
like right now.
Like basically yesterday.
That is faster than I thought. I really thought this would be something that would keep getting pushed off.
Right. And so this is really exciting. Obviously, it is just starting in California right now. But they say that soon there will be other U.S. states, and then I would imagine they might move into other countries.
Now, it only takes a minute to sign up, they said. So please send us some emails and Facebook messages if you have signed up for this to let us know how it goes, because I really want to get some feedback on it.
So this is just another business that Tesla is adding to their portfolio. So, I mean, they already sell cars.
Yep.
Everyone knows they sell cars. They sell home battery systems.
Yep.
And they sell solar panels and solar roofs.
And speaking of which, you know what's powering the show right now? Like all these lights?
What? I mean, it's nighttime, so it can't be solar energy.
No, it's the sun.
But there's no sun out right now.
We got our Tesla Powerwalls, and they are powering the house right now.
So this is a solar-powered show, even though we're shooting at night.
Yep.
How about that?
Yeah, so they do battery storage, they do the cars, they do the solar roofs, and now they're going to be doing an insurance business.
So let's talk about the implications of this, because, I mean, it means, anytime you do a new business, it potentially means more money, right? Yeah. Let's dive in. Let's dive right in.
We've done the numbers.
Yes.
Okay, so Teslas are safer. We've reported this many times on the show to you, and it's the way that Tesla gives you these numbers. It's a little bit dry, let me say. So we'll put this on the screen here. Basically, this is Tesla's blog post, and it shows you that for instance, in the second quarter of 2019, that there was one accident for every 3.27 million miles driven when Autopilot had been engaged. What's complicated about it is that there's three different scenarios, right? You could have Autopilot engaged, in which case you are 6.5 times safer, 85% less likely to get into an accident in a Tesla.
Wow. The next subset is driving without Autopilot, but with all of the safety systems engaged. So that would be, automatic emergency braking, lane departure avoidance, all sorts of different safety features in the car that are going to help you stay on the road and not hit anything. And so when you are driving physically with those safety systems engaged, it is 4.4 times safer. You are 77% less likely to get into an accident when you have those safety systems engaged.
Now, you could get into a Tesla without any of the safety features. You could shut off all the safety features, not use Autopilot, and you're still 2.8 times safer, 65% less likely that you'll get into an accident at all. So we're not even talking about crash safety if you unfortunately get into an accident. Teslas are the safest cars on the road. You're going to have the least amount of injury that you could have in any car.
Right.
We're just talking about the chance that you'll even get into an accident at all. So Tesla said, Tesla Insurance is a competitively priced insurance offering designed to provide Tesla vehicle owners with up to 20% lower rates, and in some cases, as much as 30%. So they're saying that basically, because we know our cars are less likely to get into an accident, we can offer you lower rates. So let's do this. Let's assume that, we showed you that there's with Autopilot, without Autopilot. Let's take the middle, which was 77% less likely to get into an accident.
Right.
So let's assume that Tesla only has to pay out 77% less payouts for accidents because there are going to be 77% less accidents, and that Tesla charges the average Tesla owner 25% less in premiums. Do you see where we're going here? They charged you less in premiums, which is good, but they gave you 25% off. But they're paying out 77% less. So they're making a considerable profit.
And let's dive into that, because it's one thing to just say like, oh, well, according to some numbers, wibbly doobly doo, here's some, and boom, they made profit. Let's dive into the actual numbers of it. So the average American pays $935.80. That was back in 2016, which is the latest data that we have.
Yep.
And that is according to the National Association of Insurance Commissioners.
Right. So in 2017, net premiums for liability insurance in the U.S. was $134 billion. What does that mean? That means if you take all of the car insurance that was paid to insurance companies for liability, all Americans paid $134 billion for those premiums. Now, you add on to that, you also have to have collision and comprehensive on your car, right? And those premiums were $88 billion. So you add those two numbers together, and Americans paid $222 billion for car insurance in 2017. Mm-hmm. Now, how much did insurance companies have to pay out?
So in 2017, insurance companies paid out $90 billion in liability and $57 billion in collision and comprehensive. So if you do the math, that gets a gross profit, let's say, of $75 billion. Right. So from what you paid in your premium to what they had to pay out for people who got into accidents, they made $75 billion. I mean, why do you think they can make all of those ads?
So let's figure out how much gross profit Tesla could have if they turned on this insurance product to all 50 states.
Okay.
So we're going to have to make some assumptions here. Please bear with us. Mm-hmm. Let's assume that about half of all Tesla owners would switch to Tesla insurance.
Right. So let's say it's about 500,000 Teslas,
Okay.
right? Because the Teslas are being insured, not the owners.
Right. So 500,000 Teslas. And we know that the average rate that Americans pay is $935 a year.
But wouldn't the insurance premiums be higher since it's a Tesla?
They probably would, but that actually works in our favor. It makes our numbers more conservative.
Okay.
And then we're going to subtract the 25% discount. You know, Tesla said they're offering 20 to 30% discounts, so we're going to average it at 25%. We're going to subtract a 25% discount, which means that Tesla would get $350 million in premiums.
Wow. So this is on top of just the average, right? We're not even considering that these cars usually have higher premiums. So we're being very conservative with our numbers. So 350 million, and that would be revenue.
Right.
And again, that's a conservative number.
Now we have to figure out how much Tesla would pay out for accidents.
Okay.
So let's look at liability, bodily injury. If we run through the numbers here, and we'll just do this once for this one section, and then we'll just jump ahead for the rest. But so the average accident rate last year for cars was 1.1%, and we're going to multiply that by 0.23, which is the reduced chance that you're going to get to an accident in a Tesla. Mm-hmm. So we come out with 0.278%. Times the 500,000 cars that are insured, and we get 1,390 claims. The average claim cost is $15,270.
And that stays the same because,
right,
let's say it's the same.
And then that means that the total payout for liability bodily injury would be $21 million.
Okay.
Now, there's also property damage, and that would come out to $16.7 million. There's also collision. That would come out to $24 million. And there's also physical damage comprehensive, which would come out to $6 million.
All right. So let's do a quick recap.
Yep.
So other insurance companies, they make $222 billion in premiums and make a $75 billion gross profit. So that would be a 33.7%, let's say, gross profit margin.
Right. So let's take a look at Tesla's recap here. They collected $350 million in premiums. They paid out $67.7 million in claims. That means that they got a total gross profit of $282.3 million. And that means that their gross profit margin was 80.6%.
Which
80%.
Is insane compared to their competitors.
Now, I want to do a disclaimer here. Of course, there's other expenses in running an insurance company. Obviously, this is the big one, the payout. But yes, there's advertising and operations and all that kind of stuff.
Except for Tesla, there is no advertising because they still aren't advertising and they haven't claimed that they're going to start advertising.
Good point. Let's think about what happens when there's even more Teslas on the road. We've just talked about the fact that this adds $282 million to Tesla's bottom line. That's more than $250 million. But let's assume that this keeps going as more cars roll off the line. So what about 5 years from now? There'll be about 3 million more Teslas on the road.
Give or take a million or two.
Right. And that means that potentially they could have $2.2 billion in gross profit from their insurance business.
Now, this obviously would mean that every Tesla on the road was insured with Tesla insurance. So obviously it's not going to be 2.2 billion. It's going to be something less than 2.2 billion.
But let me talk about why we think the take rate could be pretty high. When you buy a Tesla, if you can sign up for Tesla insurance, which they say will save you 20 to 30% and only take 1 minute, then I'm guessing a lot of people, instead of going, well, you know what, I'd like to take a couple extra weeks and call some other companies first. I think a lot of people are just going to go, sure, click, 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 done.
And especially if this rings true, especially if the Tesla community and especially the Tesla buying community, the people that don't have cars yet but are getting them, hear about this. And it's true. And people are saying, yeah, oh my gosh, I switched to Tesla insurance and I saved a whole bunch of money.
If other insurance companies like State Farm or Geico want to grab a Tesla customer when they're right there about to, fill out their online purchase of the car, they're going to have had to do what to get that Tesla customer?
A lot of advertising.
Yeah. Let's look at what insurance companies spend on advertising. The number one insurer is Geico, and they spend well over $1 billion on advertising every year.
Wow. And the runner-up is Progressive, which spends over $622 million every year. And Tesla, we imagine, isn't going to be spending any of their money on advertising.
Now, here's another thing. Once you're in the insurance business selling auto insurance to people, why not get into home and life insurance? Because home and life insurance combined with auto insurance makes up the $1.2 trillion in premiums in 2017 in the U.S. So we're talking $1 trillion industry. And if you're already set up an insurance company, all you have to do is start offering that as well.
Right, you don't have to build a new factory to make insurance for people's houses. It's just money.
And so, as we know, consumers love to bundle things to make their lives easier. So if you're already having Tesla insure your car, why not have them insure your home and your life?
Right. Now, a lot of people are saying I can't believe that Tesla's, coming into the insurance business. That's crazy. I just want to point out that there are over 2,500 insurance companies in the United States alone. Now, obviously, the top 10 auto insurers have a lot of market share, but there are a lot of other insurance companies. So it's not that crazy to start an insurance company today, especially if you have a built-in audience.
Exactly. And you also have some other things built in. You have a huge advantage over your other competitors because when there is an accident, what do you have to do then?
Well, you have to figure out who is at fault. And if all of the cars under your insurance are Teslas, that means that you could have the crash footage from the dash cam and figure out exactly who is at fault. And if it's the other car's fault, you can prove it in court pretty darn easily, which is a huge advantage over all of the other insurance companies.
Right, because the traditional way to do it is you send out a claims adjuster and they have to figure out the damage to the car, but they also have to figure out who is at fault. And so you have a whole division whose job it is to figure out, well, were you at fault when you took that turn? And you say this, but they say that.
Right.
And also, there's cases where you normally can't tell anything. Like, well, I stepped on the brake, but the car didn't stop.
Right.
Well, now Teslas have data to show, well, you didn't press on the brake.
Exactly. Now, Tesla's blog post included kind of like a little FAQ of different questions. And one of the questions was, does Tesla Insurance use driver data to price insurance? And the answer to that question was, Tesla Insurance does not use nor record vehicle data such as GPS or vehicle camera footage when pricing insurance.
Now, this surprised me because I thought immediately they would want to use what they have in abundance, which is data. Mm-hmm. But I guess what they're basically saying now is let's keep it simple. We already know just factually that the cars don't get into as many accidents, so we'll immediately be able to offer that discount without even having to scour through data.
Right, and have a huge profit margin. It's
right.
Not like they're worrying like, oh, we offered this discount, it's really going to cut into our profits. It's not, right? If our data is true, they are floating nice and high above all their expenses.
But I do want to say, I think that pretty soon they will start using data, all sorts of data, GPS data, how fast was the car moving, when did you accelerate, how much did you accelerate, all sorts of data to try to find out which kind of drivers they should lower the premiums for, which ones are more accident-prone drivers. And I wouldn't be surprised at all if they just start adding data to their analytics.
And you'll notice there that in the response to the question, they don't mention anything like driver input data, which would, the accelerator pedal was pressed 100%. Maybe that would tell you something about the kind of driver and whether or not you should insure them.
Right. Or like how, what percentage of drivers use chill and then get into accidents versus ones that are in ludicrous.
Right.
They're going to use as much data as they can because that's what insurance companies do. They comb through data to form actuarial tables so that they can figure out what premium to charge.
Now, I think that the main thing against that is that it's just pretty Orwellian to be collecting that much data about your car and have that factor into insurance, but it's actually not that far out of the spectrum of it. There are insurance companies that will put something in your car to actually measure how you drive, and that will lower your insurance. So super safe drivers will save, yada, 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 because basically they're guaranteed not to get into an accident that is their fault.
Let's just look at it for a second, how insurance works, right? If you're an average driver, there's really no reason to buy insurance. If you get into the average number of accidents over your lifetime, then you would have paid the premiums that would have equaled that. And in fact, you'll probably come out ahead to have not paid those premiums, put that money into investments yourself. Now, that means that it's lumpy. Every now and then you'll get into a big accident and have to pay out, thousands of dollars. But over the long run, it would work out pretty much to be break even.
But that was only if you were Mr. Average. Right. That does not work if you are slightly above average. But, if you were slightly below average risk of getting into an accident because you were a very safe driver, you would be ahead. You would, accumulate more money by not having insurance. Now, obviously, we have insurance.
But I mean, just look at the whole payouts that we just saw.
Right.
There's still a lot of padding for profit in the average insurance company.
Right.
So what's going to happen when Tesla starts lowering their rates for Tesla owners on their insurance?
Well, I think the first thing is that Tesla owners are going to jump off of their, I'm going to, call up Geico, be like, sorry, Geico, I'm switching to Tesla. Bye. Click. A lot of people are going to jump over to Tesla insurance, and I think a lot of other insurance companies are going to have to go like, oh, crap, we're losing business to this new Tesla insurance. And one thing that they could do would be to try and offer competitive rates with Tesla, because the interesting thing here is that if you're giving basically everyone who drives a Tesla a 20% discount on their insurance, which Tesla has said that they're going to do, and I'm sure that's on average, it would probably behoove other insurance companies to lower their rates. Now, all of a sudden, if you get into any Tesla car, you have a lower insurance than you would have otherwise. It makes the cars just that one extra little step more attractive because you say...
Not just little.
Yeah.
I mean... the average insurance is $1,000 a year. You're now getting it for 20-30% less. That's $200-$300 less a year. So, I mean, imagine the conversation that's going to happen at the water cooler. Hey, Dan, I just saved 30% on my car insurance.
Oh, you switched with Geico or something. Cool.
No, I bought a Tesla.
What? Right. It's going to be like that. It's going to be like, people who get into Teslas are going to be saving more money on insurance. In addition to saving more money on gas, because they're not going to be buying gas, they're going to be buying electricity, which is by and large far less expensive. They're going to be paying way less on maintenance. And I think it's really going to start to really show. With the Model 3 being at $35,000 and having a 20% decrease to its insurance premiums, it's just another huge step.
You know what else this Tesla insurance announcement does? It totally backs up our argument that Tesla stock is undervalued because the analysts that follow Tesla are mainly car analysts.
Right. And so they're looking at GM, and then they're looking over at Tesla, and then they're looking back over at GM, and then they're looking at Tesla, and then they're looking at GM, and they're going like, I don't really know. If you look at the car side of Tesla, it doesn't seem all that exciting. They aren't making as many cars as GM, but they tend to not factor in the solar, the batteries, and now the insurance.
And they don't factor in the disruption.
Right.
Everything about this is disruptive. It's using so much more data than the insurance companies possibly can have because Tesla has all the data on the cars. Right. And these analysts don't understand insurance companies because they weren't trained to understand insurance companies. They were trained to understand car companies.
Right.
So again, looking at the stock, I can't believe that it's not going to bust out of this range that it's been in for the longest time. Pretty exciting stuff.
It's super exciting stuff. I can't wait till it comes to Massachusetts.
Anyway, comment below if you think that 20 to 30% off your insurance rate would be something that would get you to switch to Tesla insurance. Thank you so much for joining us every week here on In Depth. We're so grateful to have so many new viewers and new subscribers out there. Don't forget to hit the subscribe button if you haven't already.
And also hit the bell button because then you actually get the notifications when we post a new video. And also a big shout out to all of our Patreon patrons. You guys rock. And thank you so much for supporting the show.
See you next week.
Now you know.